CEO and CIO Bob Dahl. All right, Bob, despite confusion, frustration, I think the market's sending a different message than the media is with respect to Iran winning this thing and the U.S. being bogged down for a long time. Your thoughts?
Yeah, I don't disagree with you, Charles. Look, the market is focused rather simply on the price of oil. And when it goes up, as it did before the opening today, the stock market was down. Then the price of oil falls off for reasons you know, and the market says, I guess it's green again, and move back up. Watch the price of oil. I know that sounds overly simplistic, but that's going to tell the tale.
Well, what's interesting to me is on the 30th, crude popped, right? And the next day, the crude popped, went over 100, went to 110, a little bit higher. But energy, the XLE, that was the peak. That was the exact high. It hasn't been higher since then, and that was the exact bottom for the stock market. So even though we've had gyrations above 100, we're hanging in there pretty good.
Absolutely right. And as long as oil is range bound, the stock market's likely to be range bound. And that's what we've seen. That high in oil, low in stocks, very well may hold. That would be good news.
Hey, Bob, I want to ask you about consumer sentiment. Headlines last week, it dropped to an all-time low. Now, we do know University of Michigan poll is highly political. In fact, when I look at it, I only like to look at the independent part of it. But history also shows these extreme pessimistic consumer polls like this one, when they get like this, they're often a buy signal.
So far, not so good in terms of those polls. You're absolutely right. As you probably know, Piper Jaffray also puts out a daily consumer poll, and it's not nearly as pessimistic as the University of Michigan. Watch these numbers carefully. Look, the consumer at $100 oil is choking a bit. There's no question about it. But by and large, is doing okay. Employment remains good. Wages are okay. And the economy is making its way forward.
Well, the good news is we've got earnings season. And now two things. Earnings estimates are edging higher. You and I are a little contrarian. We like when the bar is lower, maybe, right? But you can see technology earnings estimates have gone up. Energy estimates have gone up. Materials and, of course, the overall market. Just your read on that. I mean, it's good to be confident, but it means a higher hurdle.
Yes, it does. Look, as you undoubtedly know, in the last 2 weeks, earnings estimate increases slowed down markedly. Analysts I talked to say the following, Charles. I'm not changing my numbers because I don't know what to change it to. I'm going to wait for the first quarter earnings report, which are coming in a couple of days. Then I will listen to the conference call, and then I will reevaluate my estimate. My guess is we'll have some downward revisions in light of $100 oil and a somewhat slower consumer, but by and large, earnings are still reasonably good.
What about valuations? Valuations have come down a lot. There are a lot of purists out there who missed a big part of this market because the values were too high. I think at one point S&P was trading with around 19, maybe it's a little higher now. How does it make you feel like at least the valuations have come in?
Certainly better than we were. 23 times, it was nosebleed territory, like the good history lesson you gave us a few minutes ago. And then, yes, we did get down to about 19 times earnings, and that's still not cheap, but it's reasonable. Look, if you could convince me inflation was going to be 2% and 3%,
right,
I'd give a pass at 19 times earnings and say buy stocks. 19 times earnings and 3+% inflation, still not a cheap market.
No, it's not a cheap market. We're getting there. I mean, folks, you can see Russell 2000 close. Equal weight is right there, and that's probably why a lot of folks like it. Mid-cap, which, by the way, has been an unsung hero this year, it's right there, relatively cheap and inexpensive. Now, let's talk about some of your ideas before you go. You like Gilead. You've given that to us before. I want to kind of focus on MasterCard, though. I'm a little anxious about it. It feels to me, since Circle went public and the whole notion of stablecoin, that Visa and MasterCard, their stocks have gone sideways, even drifted a little bit lower. They've had a wonderful duopoly. I mean, is that being threatened at all? Are you concerned about that at all?
Have to be concerned to some degree. You're absolutely right. MasterCard's the most controversial of the three on the page there. And I think we've got to watch carefully about the whole payment story and credit cards. There are some at least darker clouds, hopefully not black clouds over these things. Of course, the stocks have come in noticeably, as your chart shows there. So I'm holding my nose and sticking with them.
All right, Bob. Hey, it's been too long. Appreciate you helping me start the week.